Hi friends, welcome to my market update for the day. Well, the market move today was again positive, like yesterday broadly, but there were a lot of things which were same and a lot of things which were different, right? So let me first tell you what was the same. Well, the same was that the mid cap index was 0.35 yesterday, 0.34 up, the same. What else was same? What was same was that reality was the best performer yesterday. Reality was the best performer today. What else? FIs were net sellers yesterday. FIs are net sellers today. Only thing is selling has come down from 2,500 to 1,100. What else was same? Well, dollar index more or less flat. US interest rates marginally up by 5-10 basis points. Indian interest rates by and large the same. Rupee weakened a little bit of 60 basis points by rupee weakening, right? So this is the macro situation, right? So now when you look at the whole picture, you can realize that even today, if I read out the cap curve numbers, you'll see that they are all hovering between 0.3 to 1% max. In fact, the advanced decline ratio was the same today as yesterday. 1600 odd stocks up, 1300 stocks down. But what was different was that yesterday, because the micro caps index and small cap index delivered very good numbers, today they came down. They were very small positive today. Indicates that today's buying was not so much by the needy, but by the DIIs. So DIS again today bought about 3,000 odd crores, and the pattern is the same, right? FIS selling came down from 2,500, so DII buying also came down from 6,500 to 3,500. So everything is just falling into a pattern. And when I keep telling you all that don't pick sectors, diversify, it's classically demonstrated between yesterday and today. I told you so many things the same on the market, but look at this indices which did well yesterday or did not do well today. If you look at it, yesterday's worst performers were PSU banks, private banks, and one more index. Let me just check. PSU banks, private banks, and IT, of course, was the worst performers yesterday, today, and FMCG. Today, PSU banks, private banks, FMCG were the best performers. The only constant was that reality was yesterday also very good performer, today also, and IT was a bad performer yesterday, and today also was a bad. So some things remain the same, some things change. Now, what has changed overnight for suddenly the monsoon look? Well, is it because Bombay got heavy rains today that people feel monsoon is better? Yes, the last week is better, but IMD has still not increased the projected shortfall. It's still at 90%, right? So this behavior of the market participants, so clearly today, since I felt DIs have more or less driven the market today, it means that what got corrected yesterday, they saw value in and went and bought it today. So as an investor, it's very hard for you to go and pick, like you say now, okay, monsoon is not going to be great, so because of which you will not buy consumption. FMCG was the best performer today. And then you say there's a heat wave going on because electricity consumption shot up last month. Heat wave, air conditioner sales should go up, but consumer durables was flat today. So very, very puzzling market where picking sectors on a day-to-day basis or on even a weekly basis is extremely difficult. The situation keeps evolving, so staying diversified and accumulating in a staggered manner should remain the mantra even now. No change, right? So nothing else to talk about today except that there are a lot of news flows, which some of them came during market hours and some after market hours, which is the macro, which could influence the market in the coming days. So what is it first? Well, the PMI data came out, HSBC manufacturing PMI was slightly less at 54 compared to 55. But electricity consumption, as I already mentioned, shot up. GST collections were up year-on-year basis by about 11%. Yes, net by 11%, gross by 13% to 1.95 lakh crores and net to 11.62 lakh crores. But is this reflecting our very strong domestic economy? No, because 35% increase was IGST on imports. and the domestic gross revenues grew only at 6.5%, right? So this is one set of macro data. The other thing was that RBI governor made a statement today that Indian economy will grow at a fast pace for the foreseeable future. So he doesn't see any growth related concerns. Now, what does this mean for his rate policy? Well, if doesn't see growth concerns happening, then a rate cut is not likely. Look at it that way, right? Because purpose of a rate cut, if inflation is comfortable, that is, A, oil prices have come down, and B, if the monsoon turns out better, even then a rate cut may not be on the table because he feels Indian economy will grow. So the news looks good, a headline, but it may not be positive for a rate cut. So that's one. The other thing is, of course, I think very important is that I think the private sector, Naira Energy, has cut petrol and diesel prices. So that's very, very good news. And government also, I think, has cut LPG prices. So the net impact of the Brent crude fall is coming through. And most important, because for the return of the FIIs, I said a softer dollar and softer US interest rates are important. Well, Mr. Walsh has said that he's looking at the inflation data. It has come down quite easily. And if it continues to cool, then an expectation of rate cut will build. That's a very positive news, because any bit of incremental FII money flowing to emerging markets because of a weak dollar and weaker interest rates, some part of it will spill to India. Because the $1 million puzzle is, with oil correcting $55 and India's hence fiscal deficit, current account deficit, all of these also being eased now, because SNRB scheme should get about $40 to $50 billion. Already the government bonds, which the RBI has opened the window, has brought in 65,000 crores in the month of June, when FII equity saw a 50,000 crore outflow. So debt inflows have overtaken this because of this. So clearly dollar inflows are coming, but still rupee weakened today. But overall, for the current account deficit, it's very good news. And for the fiscal deficit, it's good news. So India's riskiness is coming down. The oil-related inflationary pressures are coming down. Corporate earnings should also get a boost with the lower oil in the coming quarters. But nothing has changed the FIS mind. They're still net sellers in India. So one keeps hoping for better and better things. And one of those things which could help trigger this is a softer dollar and a falling US interest rates. So Mr. Walsh's statement, I think, is important, and let's hope that the next month's inflation print as it comes down, because the US 10-year today actually strengthened 10 basis, didn't fall. So a whole lot of data. I just thought I'll leave it with you. So in my daily updates, I thought I will also try and give you macro data as they come out, just as information. May not have anything to do with today's market, may have come after today's market, but it's important in the question of those who study the markets. It's your important information, right? Thank you, and look forward to my next update tomorrow.